You have to realize, though, that if we look at the United States from World War II, inflation picks up a little bit. Then Korean War comes along, inflation picks up. And finally, they decided, we got to calm this thing down. So what did they do? They raised interest rates above the inflation rate. And what did Volcker do in the 70s? We also had inflation in the 70s, the late 70s. The Fed ultimately raised interest rates above the inflation rate. So that is probably what is going to be required to really wring inflation out of the system. We don't know for sure, because we don't know the relationship between those increases in the federal funds rate and the growth rate in the money supply. And it's the money supply that really counts. I'm just saying, historically, that has been the pattern. The pattern is there have been inflation after World War II, after the Korean War, and in the late 70s. And in those three kind of episodes, shall we say, to wring it out, that ultimately the Fed funds rate did go up above the inflation rate.
Sorry to interrupt, but is that even possible here? So you're thinking that we could have inflation, CPI of 6% out into the end of 2023. Could our heavily indebted system here, because the big difference between the Volcker years is how much more debt there is now. Could we really sustain a 7% interest rate in this country without zombie corporations dying and the government?
Again, I'm not saying that is where they will go. I'm just giving you kind of the historical
right
picture.
You're giving me the mathematical answer, not necessarily the practical one.
Think about. I'm not predicting where the Fed funds rate is actually going to go.
Yeah.
I'm just saying, historically, if you look at it, you should be watching the Fed funds rate and the rate of inflation that we're observing, and just keep in mind. And in the past, it's required Fed funds rates to go higher than the inflation rate to squeeze the inflation out of the system. Now, you were talking about pivoting, and so forth. The Fed's always pivoting around. So we don't know exactly what their mood is going to be in a year, for example, if inflation is still hanging around, but we're in a recession. I don't know whether they'll pivot or not pivot. It's a very political environment, and it's a difficult one in the sense that we have an administration that is very anti-business and anti-free market and very statist. They're always talking about supply chains and the supply side of the economy. Well, remember Ronald Reagan. Reaganomics was supply side economics. It was trying to be friendly to the supply side of the economy, deregulating the economy, getting rid of things like price controls and red tape and so forth. And as a result, of course, that friendliness to the supply side, it makes things run smoother. If you're anti-supply side, you got a problem. And we do have a problem. And you can see it if you look at trade, for example. The interventions of the Biden administration on trade have been massive. And they start with Russia, of course. Why do you think we have this huge disruption in the oil market and gas market now? It's because of the sanctions.
Right, we took a massive source of supply out of the picture.
Why do you think gasoline is so expensive? We have an administration that is rabid and anti-oil from day one, and the refining capacity that we have in the United States, it's basically maxed out. They can't produce anymore. And why is it maxed out? Because they haven't been building new capacity because of various government policies, regulations, and so forth and so on.
Right. They don't know if they'd be able to make a return on the large investment it requires because of all the unfriendly regulation against
right.
them.
There's a lot of risk associated. These big plants, number one, if you start building them, they take quite a while to build. You can't just turn the switch off and stop in mid-process and abandon ship. So they have to have a pretty good idea that there's a regulatory environment that's constant, that they aren't going to be put out of business a year after they get the refinery expanded. All of a sudden, there's going to be some new government regulation coming in saying, "Oh, you can't produce the kind of gas that you were producing in that new refinery you just built because we've changed the regs on you."
Right.
So this is a supply side constraints and disruptions coming in. If you listen to the Biden administration and the various secretaries of, you name it, Secretary of Energy, Secretary of Interior, Energy, they're all anti. They don't want supply to be increased in these conventional energy sectors that we have. So that's a big disruptive thing. The sanctions on Russia obviously are hugely disruptive, and they've not only disrupted oil and gas, but food, grain, mainly grain.
Yeah. Oh, absolutely. Yeah, we're going to probably have one of the worst food crises in the world ever this year due to the disruptions of a lot of the Ukraine supply.
So you get a lot of unintended consequences from the sanctions, and they talk a good line about equity, the poor, and so forth and so on. What's damaging the poor right now? Sanctions. Who imposed the sanctions? The United States, the EU, the United Kingdom. But the poor in poor countries are the ones really getting hit in the food sector. But in general, people who are of low incomes, they spend all of their income, and a big chunk of it goes into food and transportation. So they get hit the worst.
No, well, absolutely. And I've been, the problems are felt even worse outside of the US, especially in the developing countries, where just those two costs alone are the vast majority of what people spend their money on. But I've been putting videos up on this channel recently about showing how much the US consumer household is getting squeezed here on this as well. It's if you enjoyed this video clip, click here to watch another one you should like.